Good afternoon. This is Todd Horwitz, coming from the floor of the CME Group in Chicago. And as we continue to track the euro currency, we'll talk about, well, the war continues, right? The currency wars continue, and it's really about trying to keep pressure on the US dollar, which has allowed the euro currency to lift off. But what we saw when the euro hit 125.50 a couple of weeks ago, it came tumbling down. And I think right now what you're looking for is for this dead cat bounce to play out and look to be a seller at about the 124.50 level. Again, we're getting, I think, nothing more than the dead cat bounce here. And of course, I believe that the Fed is going to lose control of the overall dollar, and the dollar's going to start to take off, taking all the world currencies down, but especially the euro currency, because that makes up 65% of the dollar index. So we'd look to be a seller at about 124 and a half. And I think that's a great level to look at. If they go a little higher, you can sell a little bit higher. I think you're targeting now. The first move down would target back down to about 120, but our overall target long term is down below par. So we're looking for this to happen, and it could start to happen rapidly, because what's going to happen is as the euro sells come in, as the dollar starts to take off, we're going to see a much steeper and a much faster drop because of the way we've gone up. So as the war continues, we're going to look to be sellers of this, because we can obviously see that there's not as much strength, and this is more of a dead cat bounce. That's the way I see it. This is Todd Horwitz, coming from the floor of the CME Group in Chicago.